Welcome back, my friends. Tesla shares surged 33% this week, marking their best weekly performance since May 2013. CEO Elon Musk said earlier this week the company was on target to potentially produce 2 million vehicles in 2023. The rebound followed a 6-month period in which Tesla shares declined more than 40%. Why did this sudden turnaround happen? Tesla is suddenly cutting vehicle prices. Price cuts are taking effect in the US and Europe. Tesla is trying to rejuvenate sales after lackluster year-end deliveries. The move in the US may help Tesla qualify for more federal EV tax credits. Tesla did everything they could to stoke sales volume in the United States and abroad. The electric vehicle maker is facing stiffer competition and interest rates increased. If you follow stocks, you probably know that shares of Tesla fell consistently throughout 2022. Meanwhile, Tesla has been taking aggressive actions to improve sales and operations, offering discounts and incentives to improve sales, working to improve efficiency in new factories in Texas and Germany. So, what does this mean for Tesla? What does it mean for the economy? And, what does it mean about the future of the United States? But, before we get into all of that, please press the like button and leave a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Tesla shares surged 33% this week. This is the best weekly performance for Tesla shares since May 2013. And second best on record. The stock rose 11% on Friday to close at $177.88. The rebound followed a 6-month period in which Tesla shares had declined more than 40%. The stock's 65% plunge in 2022 was its worst in Tesla's 12-plus years as a public company. Tesla's rally this week was aided by an upbeat fourth-quarter earnings report. Tesla held its quarterly earnings call with shareholders and analysts this week. CEO Elon Musk said the company was on its financial target. Specifically, Tesla produced 2 million vehicles in 2023. Musk suggested demand would support sales of those cars as well. Official guidance called for production of 1.8 million vehicles this year. The company has not revised its long-standing target. That goal is for 50% compound annual growth rate. That projection was over a multi-year horizon. Tesla beat on both the top and the bottom lines. The electric vehicle maker recorded total revenue of $24.32 billion. That included $324 million of deferred revenue related to Tesla's driver assistance systems. The company cut prices for its cars dramatically in December and January. That led Wall Street analysts to have concern about demand and a buildup of inventory. Analyst reaction to Tesla's numbers was mixed. For bulls, the growth story is alive and well, Bernstein's Tony Sacconaghi. Sacconaghi has an underperform rating on Tesla stock. He wrote in a note on Thursday. For bears, the numbers don't lie. In early January, Tesla reported disappointing fourth-quarter vehicle deliveries. At that time, production that fell short of expectations. Tesla's stock jump came at the same time as a broader market rally. The S&P 500 index was up 2.2% for the week. And the Nasdaq rose by 4.3%. Other US-based electric vehicle makers saw their shares climb higher. Rival electric vehicle maker Rivian rose 22% during the week. Shares in legacy automakers Ford and General Motors rose by more than 7 each. Rival electric car manufacturer Lucid spiked on Friday as well, rising 43% on reports of rumors that Saudi Arabia's sovereign wealth fund, the public investment fund, intended to take the company private. Some of Tesla's underperformance last year was attributed to Musk's shift of focus to Twitter, which he acquired for $44 billion in October. Twitter has experienced mass layoffs and fleeing advertisers. Tesla remains the second most shorted stock in US markets, behind only Apple, meaning that a large numbers of investors are betting on a decline. Short sellers view Tesla's appreciation as having created an overheated and overbought stock that is due for at least a short-term reversal, he said. It seems as though Tesla is finally getting competitive with their vehicle pricing. You heard it, my friends, electric vehicle maker Tesla is cutting prices. Tesla did not comment on what motivated it to slash prices this week. Wall Street analysts suspect that price cuts may help Tesla qualify for more federal EV tax credits. Tesla needs to boost sales. Higher interest rates are taking a bite out of sales. In Europe, Tesla cut prices on its Model 3 and Model Y vehicles. In Austria, France, Germany, the Netherlands, Norway, Switzerland, and the UK. Reuters reported that in Germany, Tesla cut prices on the Model 3 and the Model Y from 1% to around 17%. With the new discount, Tesla's Model 3 is priced comparable to Volkswagen's ID.3. The price of a new Tesla Model 3 in the US has dropped between 6% and 14%, depending on configuration. Tesla cut the price of the Model Y by 19%, also depending on configuration. The Model 3 is Tesla's entry-level sedan. The Model Y is a sport utility vehicle or crossover. Tesla also cut the price of its Model S sedan. The Falcon-winged SUV Model X has also seen its price lowered. Generally, electric vehicles qualify for tax credits in the United States, depending on a few factors. The U.S. government is expected to set new rules about sourcing of raw materials and battery components. A $7,500 clean vehicle tax credit until at least the end of March 2023 is at stake in the United States. As things stand right now, Tesla, and other EV makers, can buy parts and critical minerals from anywhere. And they will still qualify for some EV subsidies. Under the current, interim rules, electric vehicles need to complete final vehicle assembly of their electric cars in North America. The latest round of discounts by Tesla are designed to capture EV tax credits in the longer term. But customers who just took delivery of Tesla vehicles at the end of 2022 paid higher prices. Tesla also enraged customers in China by slashing prices on its Model 3 and Model Y cars. In late December, Tesla discounted its Model 3 and Model Y cars by about $7,500. The goal was to entice customers to take deliveries before the end of the fourth quarter. Tesla also gave some U.S. customers 10,000 miles worth of free supercharging. Tesla reported deliveries of 405,278 vehicles and production of 439,701 vehicles in Q4. Wall Street analysts expected 50% in annual vehicle delivery growth over several years. Tesla missed that goal and Wall Street analysts' expectations in the fourth quarter. Tesla now operates 4 vehicle assembly plants worldwide. In Fremont, California. A newer one in Austin, Texas. Its first overseas factory in Shanghai. And the newest one in Grünheide, Germany. Wall Street analysts expect much higher in 2023 than in previous years. But some bearish analysts are concerned over a possible demand cliff. Tesla is now facing headwinds. More competition. Higher interest rates. And slower consumer spending than in recent years. Bernstein analysts wrote, "We believe that many investors underestimate the magnitude of the demand challenges Tesla is facing." Bernstein has an underperform rating and price target of $150 on shares of Tesla after the company's share price declined in recent months. Tesla CEO Elon Musk sold billions of dollars worth of his Tesla shares in 2022. If you recall, Musk led a leveraged buyout of Twitter for around $44 billion. Musk took over Twitter and appointed himself CEO in late October. Since then, he has been distracted. He has been splitting time between Twitter and Tesla. And sharing some resources between the social media business and his electric car company. Shares in electric vehicle leader Tesla reached a new 52-week low recently. If you follow this channel, you already know that I have likened the economy to a soufflé. The top is starting to collapse down onto the bottom. But the bottom is solid and getting denser as the top collapses onto it. And by top, I mean luxury goods and consumer discretionary items. My friends, a Tesla is a luxury item. So, it does not surprise me one little bit that Tesla executives are starting to feel the pain of the deflating soufflé. Of course, Tesla cars have positive environmental value. So, you might say that buying a Tesla has more meaning than just as a luxury item. Many people consider it a price that everyone in society will eventually have to pay to face climate change. But as things stand right now, a Tesla is right there with a luxury home at the top of the deflating soufflé. In 2021, Tesla had only the Fremont, California factory and the Shanghai, China factory operating. Now, Tesla has the Giga Berlin factory and the Giga Austin factories up and running. There have also been some severe growing pains at Giga Berlin and Giga Austin. But Tesla still faces headwinds from many directions. One particular challenge is skyrocketing commodity prices. But, what do you think? Please leave a comment below and press the like button. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.